A very warm welcome to you and many thanks for joining us on this week's edition of the program. We remain your source for all the latest happening in the world of insurance. My name is Loretta. You are warmly welcome. On the lineup this week, we bring you highlights from the 52nd African Insurance Organization Conference and General Assembly, which took place on the 5th to 9th of June at the Intercontinental City Star Hotel, Cairo, Egypt. The annual conference was hosted alongside the Insurance Federation of Egypt under the theme, Insurance as an Enabler for Economic Growth for All. As always, the conference drew about 2,000 delegates from 57 countries in African, Europe, Asia, and Middle East. At the end of the 4 days conference, the insurers on the African continent has resolved to raise the market penetration from 3 to 5% through aggressive digital transformation and better regulatory framework.
We serve as guardians of trust and resilience, contributing to economic development, financial security, and social stability across our societies.
The rich cultural heritage of the African continent was also on display. What more can I say than to urge you to sit back and enjoy this time with us, because it will be worth a while. Please stay with us.
The 52nd African Insurance Organization and General Assembly AIO was recently organized in Cairo, Egypt at the Intercontinental City Stars Hotel under the theme Insurance as Enabler of Economic Growth for All from the 5th of June to the 9th. The yearly gathering of insurance professionals drew over 2,000 delegates from across Africa, Europe, Asia, and the Middle East. Given the high-profile nature of the AIO conference, top government functionaries were present at the opening ceremony. Delivering the official opening keynote on behalf of the Prime Minister of Egypt, Dr. Mohamed Farid employed insurers on the continent to prioritize health insurance for Africans. Also joining his voice to welcome delegates to the conference, Dr. Ahmad Rostom, Minister of Planning and Economic Development, Egypt, called on insurance companies across Africa to integrate national social development plans with financial services because sustainable economic growth depends on expanding insurance safety nets to the vulnerable and informal sectors.
Africa's average GDP growth has accelerated to an estimated 4.4% in 2025. This is up from 3.5% in 2024. It's really a leading region growing in this global economy that is facing mounted uncertainties. And we have 22 countries in Africa achieving growth rates for above 5%. And that is really also telling why Africa is an opportunity and why now that as we hop into this uncertainty juncture moving ahead, the eyes are all on Africa for potential, not only resilience but potential quick recovery. And insurance will play a critical role in this element. And why? Because Africa has almost 2.5 trillion of commercial bank assets, $320 billion. That's in dollars. $350 billion in insurance assets, and with a modest penetration rate of 2%, under 2% of GDP for the insurance premium, which shows that there's a lot of work that you have to do in this what Minister Farid has mentioned. We look forward to continue collaborating with you. We're proud also of what the Egyptian insurance market has achieved, almost an 8.9% growth in the first quarter and 12.5% growth in the second quarter of the current fiscal year. We have the unified insurance law that we're happy to share experience with you that has really moved the needle when it comes to the performance of the insurance sector. And we have currently over in the non-banking financial sector 2,500 companies serving 64 million Egyptians with 1.4 trillion Egyptian pounds financing, and that's 54% of the financing to the private sector and households in the economy. And that's why the non-bank financial sector matters. As we move forward, the hope is really on the non-bank financial sector to lead financing development and to support financing development and offering innovative financial services to the African people, to the Egyptian people, to help with navigating this era. I think your presence here today speaks and talks about the importance of collaboration, making the Africa Free Trade Agreement a reality on the ground, not only for commodities but for services where insurance can play a critical role. And I hope we discuss this and then building bridges, building trust between the insurance companies across Africa to help finance development in the continent.
With the opening formalities over, in a new dimension of the annual AIO conference this year, the 52nd AIO president, Mr. Ala El Zohari, was sworn in, taking over from Mr. Yarid Mola of Ethiopia.
Congratulations.
In his acceptance speech, Mr. El Zohari noted that insurers serve as guardian of trust and resilience.
During my term, I'm fully committed in close collaboration with our members and partners to advancing a unified African insurance ecosystem. Our priorities will include expanding inclusive insurance, accelerating digital transformation, empowering youth and women, and strengthening the institutional and knowledge infrastructure of our industry to promote great efficiency, transparency, and long-term sustainability. I'd like also to reaffirm my commitment to strengthen strategic partnership with regional and international institutions while enhancing the role of innovation and capacity building as fundamental pillars for the future growth of the insurance sector across Africa. One of our key priorities will be the expansion of AIO membership to ensure broader participation from regulatory authorities and national insurance associations across all African markets. Greater representation will foster strong collaboration among stakeholders and reinforce AIO's position as the unified voice of the African insurance industry. Equally important is the continued development of the African insurance data repository. This initiative is the cornerstone of a broader vision, the creation of a comprehensive continental insurance data platform that serves as a trusted source of market intelligence for regulators, insurers, researchers, investors, and policymakers. Reliable and harmonized data will be essential for informed decision-making, enhanced transparency, improve risk management, and increase investor confidence. Looking ahead, innovation must remain a strategic priority. We encourage greater engagement of insurtech and fintech companies with the AIO ecosystem and support the establishment of an annual African insurtech hackathon to stimulate creativity, foster collaboration, and accelerate the development of digital insurance solutions that expand access to protection for underserved communities across the continent. At the same time, effective communication and visibility are critical to maximizing our impact. Strengthening AIO's digital presence and outreach capabilities will enable us to engage more effectively with stakeholders, industry knowledge, and inspire the next generation of insurance professionals throughout Africa. In addition, we support the launch of an annual AIO Research and Innovation Award program to recognize outstanding contributions to the African insurance sector. By encouraging research, innovation, and knowledge, sharing this initiative will help build a stronger intellectual foundation for the future development of our industry. Our mission extends far beyond business. We are entrusted with protecting lives, supporting enterprise, and helping communities recover from uncertainty. We serve as guardians of trust and resilience, contributing to economic development, financial security, and social stability across our societies.
With the investiture of the way, delegates settled down for serious deliberations on the theme and sub-theme papers and sessions of the conference. The first session of the conference focused on exploring insurance as a critical structural catalyst for intra-African trade and export development. Keynote speaker was Mrs. Kanayo Awani, Executive Vice President, African Trade and Export Development, Afrems Bank. According to her, when the AfCFTA is operationalized, insurance across the continent will and should be able to underwrite risks from a single license.
Globally, insurers hold approximately $42 trillion in assets. If we channel even half a percentage of that capital toward African infrastructure, it will then begin to close the continent's annual financing gap. The instrument that channels it is actually risk transfer. Behind every power plant, every port, every refinery, every cross-border receivable sits an unbroken chain of underwriting, construction cover, surety, political risk protection, business protection, liability. So when that chain holds together, projects can close. When it breaks, projects do not close. This is at the heart of our industrialization ambition, job creation, and wealth creation. This is why policymakers must see insurance as mature markets do, not as peripheral service, as we often see sometimes, but as part of the core infrastructure of trade and project finance. Research shows a strong link between higher insurance penetration and higher manufacturing value added per capita. Put simply, if a country has industrialized, it means it has learned to carry its own risk. While I have painted a picture of what is possible, there are constraints. The structural reasons are well documented. Insurance growth across most of the continent is constrained by four main factors. You all probably know better than I do. Fragmented national regulatory regimes that prevent insurance from achieving cross-border economies of scale, large informal labor markets that exclude between 60 to 85% of workers from contributory protection, underdeveloped capital markets that limit the long duration access, and gaps in credible loss data that force underwriters either to overprice or even to avoid it altogether. These are not failures of will. The will is there. There are failures of integration. And they are precisely what the AFCFTA, applied seriously to financial services, can address. A continent assembling itself into one market cannot remain a patchwork of small, fragmented, undercapitalized pools of risk. The solution is now within reach. The AFCFTA protocol on trade and services, once fully operationalized for financial services, will permit African insurance to underwrite continental risks from a single license, to mutualize capacity across borders, to syndicate the large deals that no single national market can carry alone, and to access pooled data across 1.5 billion consumers. That is how that $6 billion insurance market can grow. That is how we can scale. That's how we can become a $30 billion market. That is how thin pools become deep capital. The sharper question, therefore, is not whether insurance matters, it's whether African capacity will scale fast enough to match the African ambition.
Another key paper presentation was on insurance pools, lever for combating continent-wide risk, by Mr. Kiza Bishetero, Deputy Managing Director, COO, African Rail Insurance Corporation. According to him, pools add significant value when members are committed.
But when you have pools, you can aggregate risks across sectors at all income levels, and also address the issue of fragmentation. We are reminded that no one country or one insurer or one reinsurer is able to effectively cover all the risks. But when we aggregate our resources together, I think we stand a better chance of having capacity to manage the risks that could threaten the existential survival of our economies. But also we've shown that pools, they have significant value when there is really commitment from members. And we may not say that everything fits all problems. We can't have a solution that fits all, but ourselves, we need to explore ways to reflect on our peculiarities and interests, including regulatory recognition, how we distribute the surplus and the capital structure. So, our question is, or what our question or understanding is, whether or not the Africa pool market will mature, but whether our perspective, our respective institutions will help shape it to benefit all of us. So if we prioritize on sharing insurance risks across the continent, build capacity, retain capital, reduce reliance on hard currency for turning international market, I think pooling resources together will be the key solution. And just maybe coming to the end, challenging for thinking, because we talked about the historical and the present circumstances. Maybe some thoughts about the future. And this may not be popular, but just food for thought. This is the landscape. I've concentrated on the reinsurers because I'm speaking as a reinsurer. This is the landscape of the African scenario on the reinsurance market on the continent. And this also is to address the point of fragmentation. So, our expansion for creating capacity has been localized generally. And I think if we discuss in most of our countries, everyone is thinking of starting a national insurance. I think most of them, and you can see on the map the insurance companies we have across the continent.
The AFIS partner session of the conference focused on compulsory insurance categories should they be expanded. Panelists were Mrs. Gloria Zavarahu, MD Old Mutual Zimbabwe, Dr. Bagayo Sakwaye, Commissioner of Insurance and Director General, Tanzania Insurance Regulatory Authority, Mr. Adam Isa, Head of Insurance Oversight Division, CIMA, and Mr. Reginald Shihota, MD Fidelity Life Zimbabwe. Moderator of session was Mr. Oliver Noel, General Secretary, African Financial Summit. In her submission, Mrs. Gloria Zavarahu said the compulsory insurance scheme must target the vulnerable in the society.
If we are to expand, you want to look at the vulnerabilities in our society. For example, the climate-related risks that we're seeing that affect a large number of people. We're looking at construction-related risks that affect a number of people. And putting mechanisms, the important thing is that there is a clear system and a scheme in place to make sure that when there's a claim, it's paid. And that there's a clear system of collection that is painless for the people that are paying, and that the group that you're trying to protect is identifiable, and you put in place mechanisms to make sure that they pay easily, but they also claim easily. So that's what I would say when we're looking at what to expand into.
Another interesting feature of the annual AIO conference is the Africa Ray Insurance Awards, which is usually characterized by glamour and entertainment. Among the winners this year were Turaco Micro Insurance Kenya and Misa Insurance of Egypt. Other sessions of the conference were on access to insurance for all, technology and alternative model. Panelists were Mr. Walter Vogt Foster, CEO Munich Re Africa, Mrs. Rebecca Ratif, Secretary, National African American Insurance Association, Mrs. Delphine Traho Medu, CEO Salam Alliance General Insurance. Moderator of session was Mrs. Yeside Oyetayo, CEO Sueya Consult. In her submission, Mrs. Traho Medu said that it is high time insurers on the continent begin to ask the consumers the types of products that works for them.
In any market, at some point you need to start asking the consumer what it is that they want and what it is that they're missing in their product structure, right? So in South Africa, if you're asking me how do we push it forward, I think my question would be, we've been selling credit life and funeral for many, many years across the South African market, much better than the rest of the continent, honestly. So the next step is to say, you know, what are they looking for that is missing right now? So the conversation needs to be turned around. We talk a lot about we are pushing our products to the market. As insurance companies, this is the best thing we know how to do. Push our product. We're not always asking the reflection from the consumer, is this product still okay for you? Is this viable? Is this something else that you are looking for? I think that's one point that we are still missing.
Other sessions of the conference were on insurance working across the financial system and building Africa's insurance continuum from Bima Lab Africa Innovation to 3E Ventures Investment Capital. The high point of the annual AIO conference is the General Assembly, where members of the organization have input in the affairs of the organization. Some of the AIO committees that briefed the General Assembly this year were the Life Offices Committee, Africa Insurance Brokers Association (IBA), the Young Insurance Professional (YIP), and the African Insurance Women Association (IWA), amongst others. The curtain call on the 52nd AIO Conference and General Assembly fell with a superlative closing dinner, which kicked off with the winners of the AIO Book Awards. The hosting flag of the 53rd edition was passed on to Morocco, the host of the 2027 AIO Conference and General Assembly. Part of the communique reached at the AIO conference this year was that the need for digital transformation, strategic targets, regulatory focus, amongst others. The African Insurance Organization, AIO, which was established in 1972 to promote cooperation amongst insurers on the continent, is still serving the interests of members 52 years down the line, to the admiration of members and non-members of the organization.
That is our time on the program this week, and many thanks for your company. Do visit us same time, same station next week for a fresh package. If you miss any of today's episode, do well to head to our YouTube channel at Almond Finance TV. And don't forget to share, subscribe, and like. Do well to visit us on all our social media handles. My name is Loretta. From the team, it's a goodbye.